Welcome back, everybody, to another deep dive. And today we're going to look at something pretty fascinating, at least for me, the history of the top marginal tax rate in the U.S.
All right.
So we've got a great document that has a bunch of tax data in it, and we're going to kind of go through it and see what we can learn.
Yeah, it's pretty amazing how this single number has just gone up and down over time and reflected not just the economy, but also like the values of our society.
It really is. It's like a financial mirror to the priorities of the nation at different points.
Exactly.
So before we go back in time, though, and start looking at this data,
Sure.
can you just, anyone who might not know,
Yes.
give us a quick definition of what top marginal tax rate means?
Absolutely. So the top marginal tax rate is the highest percentage of tax that's applied to income. But the key word there is marginal.
Okay.
It only applies to the portion of someone's income that falls above a certain threshold, not their entire income.
Yeah. Oh, okay. So it's not like all of a sudden your entire paycheck is being
Right. It's not like
taxed at the highest rate.
Yeah, you don't just hit that level and boom, it's that rate.
Gotcha.
It's more like you're climbing a set of stairs. Each step is a different tax bracket.
Right.
As your income rises, you move up the steps.
Right.
And only the income within that specific step
Okay.
is taxed at that corresponding rate.
That makes a lot of sense. That makes a lot of sense. So let's fire up our time machine.
Okay, let's
and go all the way back to 1913.
Right.
The income tax was brand new back then,
Mm-hmm.
and the top marginal rate was only 7%.
Yeah, 7%.
What was the thinking back then?
Well, in those early years, the role of the federal government was seen very differently than it is today. There was a strong emphasis on limited government intervention in the economy, and that 7% rate applied to incomes.
Oh, wow.
Over $500,000, which in today's dollars would be millions.
Millions of dollars.
It really paints a picture of how concentrated wealth was back then.
Yeah, it's amazing. All right, so fast forward a few years. World War I throws a wrench into everything.
Yeah.
Suddenly, the top rate skyrockets to 77% in 1918.
Yeah.
That's a huge jump.
That's a big one.
Yeah, so what happened?
Well, war has a way of reshuffling priorities.
Hmm.
Governments need to finance war efforts.
Okay.
And World War I was no exception.
Right.
This sharp increase reflects that need to raise funds.
Gotcha. So it's just out of necessity.
Yeah.
All right, so after the war, we have the Roaring '20s.
Yes.
The top rate takes a nosedive down to 25% by 1925.
Big drop.
Was this just a return to normalcy, or was there more going on?
It's a fascinating period.
Yeah.
The Roaring '20s was this huge surge in economic growth.
Right.
Technology advanced. There was a lot of cultural stuff happening.
Right.
So this drop in the top rate could be seen as a deliberate effort to stimulate economic activity by leaving more money in the hands of businesses and investors. However, it's complex because some people argue that the economic boom would happen regardless of the tax rate.
It's like the chicken and the egg thing.
Yeah.
Did the lower taxes cause it, or was it just a coincidence?
It's a good question.
Yeah, but of course, like all good things, the party eventually ends, the Great Depression hits,
Yeah.
and those top rates start heading back up.
Yeah. The Great Depression was a whole different economic reality.
Right.
The government needed to fund social safety nets, create jobs, stimulate the economy.
Right.
So that top rate climbed, culminating in an almost unbelievable 94% during World War II.
94%. That just seems impossible. Were people really giving up that much?
So it's really important to understand the concept of the effective rate limitation.
Okay.
There was a cap on the total percentage of income anyone could owe, even if they were in that top bracket.
Oh, so the 94% was more symbolic than reality.
Yeah.
Still, that's wild.
It reflects a different mindset, a mindset of shared sacrifice. Yeah.
And responsibility during wartime.
All right, so after the war, things settle down a bit.
Yeah.
The top rate kind of hovers in the high 80s and low 90s.
Right.
Still with that effective rate limitation in place.
Right.
And here's where it gets interesting. This period, often called a golden age for the U.S. economy, coincided with those very high top tax rates.
It really challenges the idea that lower taxes always lead to more prosperity.
Right.
It forces us to consider other factors like government investments, social programs that might have contributed to the economic growth.
Yeah. So were the high taxes contributing factor, or were they just along for the ride?
Right. It reminds us that economic history is rarely black and white.
Yeah, for sure. For sure. All right, let's move into the mid-60s.
Okay.
A period of social and political change.
Right.
What happens to our top tax rate then?
We start to see a gradual descent reaching 70% by 1965.
Okay.
But the big thing is the introduction of separate tax rates for earned and unearned income in the early 70s.
Oh, this added a new layer of complexity to the tax code, aiming to incentivize both work and investment.
So why make that distinction?
It's a great question.
Yeah.
On the surface, it seems logical.
Yeah.
Tax income from labor differently, from income generated through investments or inheritance.
Right.
But it's important to consider the potential consequences.
Okay.
Did it really achieve its goals?
Right.
Did it inadvertently widen the gap between the wealthy and the working class?
Right.
These are questions that continue to be debated today.
It's like every tweak to the tax code has like ripple effects.
Exactly.
Yeah. Okay, so let's fast forward again to the 1980s.
Okay.
The era of President Reagan.
Yep.
This is where things take a dramatic turn.
Yes. The 1980s ushered in a major shift in economic thinking and policy. Under President Reagan, there was a push for tax cuts, particularly for those higher earners.
Okay.
And that top rate got slashed from 50% down to 28%.
Wow.
A massive change.
That's huge. Yeah, it's like hitting the rewind button.
Yeah.
The gradual decline we were seeing before.
It marked a turning point towards the idea that lower taxes would trickle down, stimulate growth, and ultimately benefit everyone.
Okay, but did that theory actually play out?
Well,
I guess that's something we're going to have to
another debate.
All right, so we're going to take a quick break, but when we come back, we're going to be looking at
we'll see
what happened after Reagan.
What happened next.
And bring it up to the present day.
Sounds good.
All right, everybody, we'll be back in a minute. We just left off with President Reagan slashing that top rate in the 80s.
Yeah.
It's amazing how a single number can spark so much debate.
Right.
About fairness, economic growth,
the
role of government.
Yeah, for sure.
So where does our tax rate journey take us next?
Well, it didn't stay at 28% forever.
Right.
Over the next few decades, it gradually climbed back up, reaching 35% in the early 2000s.
Okay.
But then the 2010s brought some of the most significant changes in recent history.
Yeah, the Tax Cuts and Jobs Act of 2017.
Exactly. The TCJA.
I remember that being a big deal.
It was a major piece of legislation that impacted those top rates.
Okay.
It lowered the top marginal rate from 39.6% to 37%.
Okay.
Now, that might seem like a small change.
Right.
But the TCJA was a complex package.
Right. It wasn't just about that one number, right?
Exactly. It also involved changes to tax brackets, deductions, and all sorts of other parts of the tax system.
So it's like rearranging a whole chessboard.
Yeah, a whole chessboard, not just moving one pawn.
So what were the ripple effects of all these changes?
Well, the TCJA had a significant impact on the tax landscape. And reignited those debates about fairness, inequality, the government's role in wealth distribution. It sparked a lot of controversy.
Yeah, I can imagine.
With proponents arguing that it would boost economic growth, and opponents concerned about widening the gap between the rich and poor.
It seems like every major tax change has supporters and critics.
That's the nature of tax policy.
Yeah.
It's deeply intertwined with those social and economic issues.
Right.
The TCJA became a focal point for those debates about who benefits from certain policies.
So were the intended consequences realized?
That's the question, isn't it?
Yeah.
Did it lead to the growth? Did it exacerbate wealth disparities?
Right.
The answers are rarely straightforward. The impacts are still being studied and debated.
So we need to be cautious about attributing cause and effect.
Exactly.
When talking about the economy.
It's complex.
Yeah, for sure. Now, you mentioned earlier the difference between the marginal tax rate.
Right.
And the effective tax rate.
Yes.
Can you remind us of that distinction?
Absolutely. So the marginal tax rate is what we've been focusing on.
Okay.
The rate that applies to income within a specific bracket.
Right.
The effective tax rate, on the other hand, is the actual percentage of someone's total income that they pay in taxes.
Okay.
This takes into account all the deductions, credits,
right,
other factors that can lower the overall burden.
So even someone in a high marginal bracket might pay a lower effective rate.
Exactly, because of those deductions and exemptions.
It's like those hidden levels in a video game that only the most dedicated players find.
Exactly.
And so we have to look beyond just those top rates and really understand the complexities.
The whole system.
To really understand the impact.
Right. Otherwise, we're just getting a partial picture.
Right. And those are the nuances that often get lost in the political debates.
It's easy to just focus on the single number, like
Yeah.
the top marginal rate, but it's just one piece of a very complicated puzzle.
Right. Speaking of nuanced details, what about capital gains taxes?
Oh, capital gains.
How do they fit into all of this?
So capital gains taxes are those levied on the profits from selling assets,
Okay.
like stocks or real estate. And historically, they've often been taxed at a lower rate than ordinary income.
So someone making their money from a salary
Right.
would be taxed at a higher rate
Potentially, yeah.
than someone making the same amount from selling stocks.
That's the general idea, and it's been a source of debate.
Right. I can imagine.
Critics argue that it benefits wealthier individuals who have more investment income.
Right.
They say it contributes to wealth inequality and undermines the principle of fairness.
Yeah, it makes you wonder if the system is truly equitable.
It's a great example of how technical details in the tax code can have those big implications for social and economic outcomes.
Right. Really highlights the importance of seeing the whole picture.
The whole picture, not just those isolated pieces.
It's a reminder that tax policy is about more than just money.
Right.
It's about shaping behavior.
Yes.
Influencing wealth.
Exactly.
And reflecting our values as a society.
And speaking of shaping behavior, let's talk about tax avoidance.
Ah, yes. The strategies people use.
Yeah.
To legally minimize their taxes.
Always a hot topic.
It is a hot topic.
It's important to remember
Yeah.
tax avoidance is legal.
Right.
Tax evasion is illegal.
Right.
But even within legal tax avoidance, there are debates about fairness and whether loopholes benefit the wealthy more.
So some would say individuals and businesses have the right to minimize their taxes within the law.
Right.
Others would say those loopholes create an uneven playing field.
Exactly.
It comes down to those fundamental questions about what a fair tax system is.
What does fairness look like?
Yeah, what role should the government play?
Yeah, what's the right balance?
Questions we've been grappling with throughout this whole deep dive.
And likely will continue to.
Yeah, for sure, for sure. And as we've seen, understanding the history, the complexities, the different perspectives.
Absolutely.
Can help us have more productive conversations about this.
Informed citizens are essential for shaping a tax system that aligns with our values and promotes a just society.
Okay, so we've covered a lot of ground today.
We have.
Exploring all the ups and downs of that top marginal tax rate.
Those twists and turns.
From its humble beginnings to the sweeping changes.
It's been a journey.
It really has.
Yeah.
But our journey isn't over yet.
No.
We still need to explore where things stand today and what the future might hold.
Exactly. Let's do it.
Okay, so let's shift gears a bit and focus on right now, like what's going on today.
Okay.
What does the top marginal tax rate look like in current year?
So as of current year, the top federal income tax rate in the U.S. is 37%.
Okay.
And that applies to individuals earning above a certain threshold, which gets adjusted every year for inflation.
Right.
But as we've talked about, the effective tax rate, what people actually end up paying can be very different.
Right, because of all those deductions and credits and all that.
Exactly. It's like those hidden levels in a video game.
Yeah, for sure.
Beneath the surface, there's a lot more going on.
Now, I've been hearing a lot about raising that top rate.
Yeah.
It seems to be a hot topic these days.
There's definitely a movement.
Yeah.
Particularly among progressives who want to see a more progressive tax system with higher rates for top earners. They argue that this would generate more revenue for things like public services and also help address that gap between the wealthiest and everyone else.
Right, the whole income inequality issue.
Exactly.
I've also heard the argument that those higher taxes wouldn't hurt the economy and might even lead to a more equitable society.
Yeah, they point to times like the mid-20th century when we had much higher rates but still saw growth.
Yeah, so it challenges that conventional wisdom that lower taxes are always better.
It really does. It makes you think about that relationship between taxes, growth, and equity.
Yeah, for sure. But of course, there's another side to this whole debate.
Of course.
There were those who say raising the top rate would be bad for the economy.
Right. They argue that it would discourage investment.
Stifle job creation and hurt everyone.
So that classic back and forth.
It's that tug of war.
Yeah, between different economic philosophies.
And social values.
And probably a debate that's not going to go away anytime soon.
Probably not. It's about that tension between individual freedom and collective responsibility.
Yeah, finding that balance is tricky.
Yeah. How do we encourage individual initiative while also providing for those in need?
It's tough.
How do we grow the economy and address inequality at the same time?
Big questions.
Good questions.
And questions that have been around for a long time. Throughout history.
As we've seen, tax policy is more than just numbers.
So much more.
It's about our values,
Absolutely.
our priorities,
our vision for the future.
So as we wrap up this deep dive,
Yeah.
What's the one thing you want listeners to take away from all of this?
I think the most important lesson is that tax policy is always changing.
Okay.
It reflects our values as a society.
Right.
There's no one right answer. No magic formula for the perfect rate.
So it's on us to be informed, to
Yeah.
engage in these conversations.
Absolutely.
To understand the complexities.
And to be open-minded.
Yeah, for sure.
Yeah.
We need to ask ourselves, what kind of society do we want?
Exactly.
What role should the government play?
Big questions.
And how do we create a tax system that reflects our values?
It's a collective effort.
Well said.
Yeah.
Well, everyone, that brings us to the end of our deep dive
It does.
into the world of top marginal tax rates.
It's been a journey.
We hope you found it insightful.
And thought-provoking.
And maybe even a little inspiring.
Thanks for joining us.
Keep those brains buzzing, everybody.